NIO's CEO has sent a very real warning to the entire electric vehicle market, and investors are not paying enough attention. In this video, I am breaking down what actually happened, why NIO's demand outlook suddenly changed, and how the surprise removal of a major subsidy has disrupted not just NIO but the entire EV industry. If you follow NIO or the China EV sector in general, this is something you absolutely need to understand. Let's start with the issue that triggered everything. For years, China has supported EV adoption with different subsidies and tax incentives. Usually, these subsidies end at the end of December, and investors expect that cycle. That's how it has been every single year. The industry plans around it, customers plan around it, and car makers adjust pricing around it. But this year, something completely unexpected happened. The subsidy ended abruptly in mid October, and nobody saw it coming. Not consumers, not investors, and not even NIO itself. NIO's CEO openly said that the sudden removal of this subsidy has a much more serious impact than anyone anticipated. And when he says anyone, he means the entire EV ecosystem. Automakers were expecting buyers to rush in quarter 4 as usual to buy before subsidies end, but because the subsidy disappeared earlier than expected, people are now pausing purchases instead of accelerating them. This is the heart of the problem. Demand visibility collapsed instantly. NIO was expecting a normal Q4 pattern, but instead they're seeing hesitation from customers. Let me explain why. This subsidy was basically a trade in benefit. If a customer traded in their old car and bought a new EV, they got roughly 15,000 RMB, which is around 2,300 US dollars. In many markets, that might not sound like a lot, but in the China EV space, it's a huge motivator because low margins mean every dollar matters. That subsidy going away created a massive psychological shift. Instead of feeling a push to buy, consumers now feel absolutely no urgency, and when urgency disappears, large ticket decisions stall. NIO said their new orders across the industry dropped sharply immediately after the subsidy removal, not just for NIO, for Tesla, Xpeng, Li Auto, every company. There is no incentive for a buyer to buy now because the 15,000 benefit is gone. Customers basically said, let me wait and see what happens next. And that wait and see mindset hits all automakers at the same time. Now, combine this with something else. Next year, there's a small tax increase for EV purchases. Some people think this tax rise and the subsidy are the same thing, but they're not. The subsidy is a government incentive for trading in your old car when buying an EV. The tax increase is just the regular purchase tax adjustment. They are completely separate. And here's why it matters: the tax increase is small, the subsidy removal is big. One creates mild urgency, the other removes urgency entirely. This is why NIO's weekly insurance registration numbers softened to around 9,000 a week, and that is why they lowered guidance. Not because demand for their cars disappeared, but because the entire industry got punched at the same time by a decision nobody expected. Now, let's talk about the models that are being hit hardest. According to NIO, the biggest impact is on the existing models based on the older 400 volt architecture, cars like the ES6, ET5, and ET5 Touring. Customers are already waiting for next generation models with 900 volt architecture. So think of it from a buyer's point of view. Why would somebody buy the current version now when they know a faster charging, more efficient version is coming, especially when there's no longer a 15,000 incentive pushing them to buy immediately? This creates a double slowdown. Customers are waiting for new technology and they're also waiting because the subsidy disappeared. These combined effects hit NIO's legacy models the hardest, but this impact is not the same across the entire lineup. For newer models like the L90 or the ES8, the demand remains very strong. NIO's CEO specifically said that these new generation models are performing exceptionally well. So the company still has momentum, but it's more concentrated in its flagship products. Let's zoom out and look at the bigger picture. Every Q4, the EV industry sees a consistent pattern. Deliveries rise because customers rush to buy before subsidies expire. That's been true for many years, but this year that Q4 wave vanished halfway through the quarter. Instead of strong Q4 demand, we are seeing a sudden drop in new orders across the sector. That is a rare and major shift. It's not a small dip or a temporary pause. This is a structural disruption to the normal demand cycle. Now, there is one important thing investors must understand. In terms of year over year growth, NIO will still look strong because their new flagship models are performing extremely well. The L90 especially has become a blockbuster product, and when a product becomes a hit in China's EV market, the momentum is huge. That's why NIO still expects better overall performance this year compared to last year. But the issue is not year over year growth, the issue is expectations versus reality. NIO was expecting much stronger Q4 numbers before the subsidy disappeared, and when expectations get cut suddenly, the stock reacts. Let's move toward profitability. NIO has been very open about what they need to become consistently profitable. The CEO said they need around 50,000 monthly deliveries with 20% gross margins. That combination gets them to profitability. But with the current slowdown caused by the subsidy removal, that timeline gets pushed back. It doesn't kill the path to profitability, but it delays it. This is why investors are nervous. NIO was building momentum, launching new models, expanding its brand presence, and improving margins. But now, because of an external government decision, the path becomes longer. It doesn't mean it's impossible, it just means the timeline shifts. This is very similar to what happened to Tesla years ago when government incentives shifted unexpectedly. EV companies are especially sensitive to incentive changes, but despite the short term hit, there are two strong positive forces supporting NIO. The first is product desirability. The new ES8 and the L90 are widely considered some of the strongest SUVs in China's premium EV category. These products are keeping NIO's brand powerful. The second is brand hype. The recent endorsement from a major celebrity brought massive attention. One collector even paid 3 million RMB for a signature edition L90. This kind of buzz helps brand strength, helps attract premium buyers, and keeps the company in the spotlight. But let's be clear, none of these positives fully offset the subsidy removal shock. And IO's CEO said it directly: do not underestimate the impact of this subsidy disappearing. This is not a small policy change, this is a major disruption. And the warning is not just for NIO investors, it affects Tesla, Xpeng, Li Auto, Xiaomi's EV segment, everyone. The big question is what happens next. Will NIO have to offer their own incentives to make up for their subsidy loss? Possibly. They might use creative promotions, limited editions, special packages, or exclusive trims. NIO has a history of doing this effectively. The company is extremely good at creating desirable limited edition versions that drive immediate demand. So we may see more of that. It's one of their most efficient tools for boosting orders. The second factor is customer psychology. People who want the 900-volt generation will wait. That is a fact. These customers are not lost. They are simply waiting for the technology they want. When those models launch, demand could accelerate again. So the slowdown today might translate into a demand spike tomorrow. But the bottom line for investors is this: the subsidy removal is a serious short term headwind. The CEO literally said the industry underestimated the impact. That includes NIO. Anyone who claims they predicted this is simply not being honest. No automaker saw this coming, no analyst saw this coming, and no consumer expected this. When something this unexpected hits, the industry needs time to adjust. Long term, NIO still has a strong position in the premium EV market. Their technology roadmap is ambitious, their battery swap ecosystem is unique, and their new models are gaining traction. But in the short term, investors should be prepared for volatility. Deliveries will fluctuate, guidance may be conservative, profitability will take longer, and demand will remain unpredictable until the next pricing cycle. So, as an investor, the real question is whether you believe in NIO's long term ability to move past this. If you do, this is a temporary storm. If you don't, the short term numbers will look worrying. But one thing is absolutely clear: the CEO's warning should not be ignored. This subsidy shock is bigger than people think, and the effects will be visible across the entire EV market for months. If you found this breakdown helpful, make sure you subscribe and comment the next stock you want me to analyze. This is Vikram Singh, and I'll see you in the next analysis.